Good afternoon. This Thursday, December 1st, first trading day of the month, was greeted with massive movement overnight. The bean oil market collapsed limit down as the EPA announced their RVOs, the RINs of what they're going to use for blending allocations, and the market didn't like it. And we had sent the soybean oil market limit down today, as along with corn also struggling in that environment. Let's take a look at what the EPA did put out and why the market was disappointed. Here's what had the market upset today. If we look down below here, cellulose is the yellow, biomass is the light yellow, and they're the ones that showed some growth in 20. This is the year 25. Here's the year 24. Here's the year 2023. But if you look at ethanol, we were at 15 during 2017 through 2019. Then, of course, we had COVID issues, and then 2022 left at 15. Here we're just the same for 23 they put it at, and then only a moderate increase. It's only going to take 85 million bushels of corn to satisfy this in 2024, and it was left unchanged for 2025. Everybody thought there was going to be an advance. You're going to see a trend increase here. That wasn't the case. Other advanced biofuels is these lighter red ones. Now there you can see moderate growth. This didn't set well with the market. They thought the Biden administration would add something more like this, a little more trendy to the upside. And so the ability to satisfy these with both soybeans and corn for the usage for growth, it's not there. We've got to look to exports for growth, and our exports are in massive decline. So December 9th is the problem. Next week, we're going to see a slash probably in corn exports, 50 million at least. They could go as high as 200 million bushels, but probably more average, about 100 million bushels will come off the exports next week. And then, of course, they will add that to our carryouts for corn and beans going up. Here's the weather models for South America improving. This is on the 10-day models going out through Monday the 12th. Take a look down below here. Santa Fe finally catching some rain. Here's Cordoba into some rain. Buenos Aires, rain. Of course, Mato Grosso, they've been good, looking good. Here's Mato Grosso do Sul. Even Rio Grande do Sul here in Brazil. They've got some good rains coming. And of course, just to remind you, this is the area where 70% of the beans, 72% I think it is to be exact, where the beans are grown. And then you add in Santa Fe, that takes it to over 80% of all bean production. There's rains coming for this area within a week. They got to go through December 5th through the 7th, some 90 to 100 degree weather. But keep in mind, they're 50% planted in this range. You can't kill a crop that's in the bag yet. So that's why the bean market is having a hard time getting excited over that. Everything seems to be turning negative on soybeans, especially China showing up and scooping up some Argentine beans that have been moved this week already. The dollar, about the only fair thing as the dollar continues to decline. But keep in mind, the bean rally, the corn rally has occurred in the month of November as the dollar declined, and we had seen the advance. And now we're taking over other news stories that are affecting the bands, the trading bands we call for the dollar. And so the dollar is already softening up. We're going to have massive support once we get down to this 104 range, 103 range. I thought I loaded my monthly chart in here, and it'll show we'll probably get some kind of bounce off that value. So that's a negative moving forward. So the dollar has already thrown something friendly to the grains, and they're taking nothing from it. On corn, obviously the fourth wave is done, and all it is a matter of falling through the 200-day moving average here at 655, 656. We're oversold. Any more weakness tomorrow might get a bounce off of that, but I think the inevitable is we're moving lower, breaking down, and the intraday charts, this trend line let go today, and we couldn't even challenge this moving average. But the moving average that's been the king in all this thing, look at the highs over the last several weeks when December was on here and March took over, could not get through 672 to 674. Let's blow this thing out. Look at how good this moving average is. This thing defines the corn market when it's all said and done. Here when we got long again, and now when we got short. It is a 50-day exponential moving average on the continuation chart. And I hate to say it, but we're done. And I think the corn market is now going to end the new year working lower. And I think that 635, 640 range is going to be the targeted support area that this corn market is going to move down to. As long as the rains continue bountifully in Brazil, that's our destination because their corn and Ukrainian corn is well under ours. Well, here's my monthly chart. This is the dollar chart pulling back to what is major multi-monthly, multi-year support. We'll likely get a bounce off of this 103, 105. So the weakness in the dollar is not really helping much to the corn and beans. It's already been played in to the corn and beans. And now we're trading other stories that's changing our trading bands. On the beans, well, I think we can say the 786 was the number. 1480 was that number. Exact high yesterday, 78.5. And kerplunk we go. We are now in wave 1 of wave 3. Support came in at the green line today. We got a bounce off of that. The prospects of a minor bounce are there. If we go into the intraday chart, you can see how we had a 1 down, and then there was a bounce this morning, 2. Now we're in wave 3 of a minor wave. We're going to count 5 waves of wave 1. And we could see a little bit of a bounce here, and then a final 5. Notice this trend line. This trend line goes back to the July lows. So this could probably give us some trading support initially in the 17 range, especially when you take a look at that purple line, the moving average, the 200-day daily moving average is in the 1412 area. So what I could see here is probably some trading that takes place 1412, 1417, a bounce. This will be this is your top. This 2 should be over here, by the way. That's your top. You get a wave down 1, get a little 2 bounce, get a wave 3, get a 4, and then you get a 5 to finish this thing off. But these beans, they're in tough shape, and I think we're going to see that $13 value early in 2023 getting challenged by the spot beans as the post-harvest rally is done. Bean oil, I warned on Tuesday and I warned last week that this was an important support range. This whole bean oil rally was a bear market bounce. It was an A, B, C bounce once we triggered this sell-off, which was higher than a 618, but it didn't make the 786. And I said we'd probably bounce off of this, and that would help the beans recover. But I said, quote, unquote, last Thursday, you close under 69.5, it's over with for beans. At limit down today, yeah, this does not help. Now, meal looked like something, and I said Tuesday, I don't know how meal could get here. Well, here's how it gets here. There are so many people short meal, long bean oil. They're getting unwound the last 2 days on this EPA numbers that it blew them up. And now it allowed them to push to the downtrend line today and come off. There's no bull market coming in meal. We've got plenty of meal. This technical resistance at 425, 426 will likely hold. And when this turns down, this will be part of the bean overall move lower as well. Wheat, Kansas City, broke down. What's interesting is the wheat market in the month of November has moved lower, while corns and beans moved higher. So today, we made our low early in the day, at a new low, and bounced all day. And it's possible maybe wheat made a first trading day of the month low. Chicago did it yesterday. Could get a mild bounce here back up into this 920 range before it falls lower. If we zoom this in a little bit more, let's look at this moving average on our 6-hour Kansas City wheat chart. See how this thing just kind of rides the market? Granted, it was a tough month here in November, but we kept stating that was the fall high. When that Russian story broke in early November, we said it's just a bear market rally. 786 would stop it, or the 618. It was the exact 618 retracement that stopped it, and now we're moving lower. Now, again, we could rally here back up to where you see this thing slowly trending lower. 915, 920, Kansas City wheat will likely get sold again. We don't have a major turn date until the first of the year now, which is January 3rd, 4th, 5th. Likely be a 60-day cycle low, and I think you will see the wheat market get a little minor bounce and still keep working lower into January 3rd, 4th, 5th. Hogs, just notice after that vicious rally that stopped at the August-September highs on that trend line, we obviously did an A, B, C pullback, which hit the 50% retracement here mark of $84. What's kind of neat for you techies out there, A, if you measure the length, and then go times 1.618 and move it over here, 83.80 was a 1.618 exact low, 83.72. So we're likely going to push here, stalling out of the trend line again. Since this is an ABC down, we're starting a whole new 5-wave structure here. I would anticipate this is 1, stall, get a 2-wave pullback, and then we push through in a wave 3 fashion. And these hogs could run to that 94 range or higher here going into the new year. Gold did bottom out last week at our support zone at 1720 we talked about, has pressed higher to up against the resistance of the August highs. We have a turn date for next week on the 9th, 10th. Wouldn't be surprised by tomorrow if we can't best this. Watch us get us minor pullback into that turn date here next week, Friday, and then we start another advance again on the gold market. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.